week. Joining us right now to talk markets, global market strategist and the director of U.S. institutional equities at INTL FCStone, Yousef Abbasi. Great to see you, Yousef. Thanks very much for joining us.
Good morning. Thank you for having me.
So what's your take on what's going on? I guess before we get to stocks, oil. This bear market that we've been seeing in the price of oil, what's behind that in your view?
Yeah, there are a couple of interesting factors. Obviously, one of them is, you've had this nat gas and crude trade that's been put on, and people have been short nat gas and long crude against it and seeing higher and higher crude. And over the past few weeks, what's developed is a colder and colder temperature map for this country in the Northeast and in the mid-continent. And that's pushed nat gas prices up pretty dramatically over the past 6 or 7 trading sessions. And on the other side of that, you're seeing people take off that crude long, and it's exacerbated that move lower.
So you think, Deirdre, you said earlier it's oversupply?
Well, I feel like that's how traders are responding. Do you see it that way?
I think the dynamic over the past 2 weeks has been oversupply, and some of the Iranian supply is not going to be coming off the market as quickly as we thought. But I think what we saw yesterday in the past 2 or 3 days, that exacerbated decline has really been caused by this unhinging of the nat gas oil trade.
And then we saw, of course, equity trade, all those energy stocks. It was like 27 out of 29 in the S&P 500 down as well. So it's affecting stock trade as well.
Yeah. Tell us about stocks.
Yeah, I mean, let's stick to energy really quickly. If you look at the oil services, you're seeing the ETF trade at levels we hadn't seen since crude was at $40, and since energy credits were a huge concern. Everyone was talking about energy credits, and high yield was 10% lower because of the weighted basket of energy credits in high yield. And it's just interesting to see those dynamics aren't in the picture, yet you do have oil services trading at levels we haven't seen since crude was at 40.
Why the sell-off in financials?
Yeah, I mean, the sell-off in financials has been one of those things where I think, again, people were just caught off sides. People are now expecting fewer rate hikes. If you look at funding costs at banks, they are inching higher, but there's such competition at pricing loans, and you just hear this from all the banks. C&I loan growth is a little bit slower, and there's still competition to price these loans, so they're not seeing that net interest margin expansion. And then, of course, with regards to refinancings on the mortgage-backed security side, we understand how that's playing out. Clearly, fewer and fewer, so originations are lower and lower for mortgages.
But, you look at some of the stocks you mentioned. Look at Home Depot reported yesterday. Blew it right off, well beyond what any estimates was, raising for the year. So there are some pretty solid equities out there, stocks. And so I think it's more, talk to us a little bit about maybe the market's solid. It's all these external, extraneous events that are caused. One day we got too much oil, and in 24 hours we're out of oil.
Yeah, I mean, you're speaking exactly to the fact that sentiment has been rather fragile, right? So these headlines and what people perceive as the it factor right now tends to grip this market and take it, by the head. And with Home Depot, you kind of speak to the entire earnings season. We were looking at an earnings season with 25% year-over-year growth. Again, a very robust, better than expected growth on the EPS side, on the revenue side as well. But people are looking ahead, and they're looking at what's going on with earnings into 2019, right?
I like your point, though. It seems like there's still companies worth investing in. You just cannot buy an S&P 500 index future and hope for the best.
And,
right?
and at what price do you buy it? I mean, we're talking about earnings for 2018 being up 25%, but in 2019 being up 8%.
Yeah.
Right. So what do you want to pay for that?
Yeah. But if you look at Home Depot, it was down around 170, and its high was over 200 this year. So this is a company that, really, I don't want to say it's inflation-proof, but, so if new construction tapers off, typically what happens, people start reinvesting in their homes. So there's investment and there's expansion. I mean, there's some pretty solid stocks out there. I wouldn't want to broad brush the whole market.
Yeah, I feel like it's back to that Peter Lynch model, right? Buy what you know and be familiar to your point about what you're paying. What's the value proposition?
Is the expectation that sooner or later recession must come? Is that now factoring heavily into the market?
Yeah, I think from the conversations I've had, people look at the length of this business cycle, and they do think sooner or later a recession comes. And the combination of higher rates, the potential that nothing gets done on trade, all of these start to weigh on sentiment. To your point,
meanwhile, we just saw 4.2% growth in the second quarter and 3.5% growth in the third quarter.
Yeah.
So talking about recession seems a little odd to me, but
isn't that what happens though in the minds of the investors?
Well, when the Fed raises
on the horizon,
and when the
people
Fed raises
look ahead.
rates.
How many more rates?
I think you get one in December,
Yep.
and then I'm iffy on June. But the one realization is that the unwinding of the balance sheet in 2019 will essentially be one rate.
I mean, the trade story, to me, seems like it could really influence markets, whether it's on the upside or downside. Vice President Mike Pence meeting with Japanese Prime Minister yesterday, urging the leader to help reduce the U.S. trade deficit, and we'll see what happens in terms of a trade deal with China. I mean, is that baked into the market in your view, that we will see a deal with China and we will see USMCA get ratified by Congress in the new Congress next year?
I don't think it is. I don't think a trade
maybe
deal.
That's some of the nervousness here.
Absolutely is.
Yeah. What do you think?
Yeah, no, I think we will get a deal. I think that it's going to be like the last election. Both Xi Jinping and Trump have to come out winners. In that deal, they're both going to be able to pound their chests and say, "Look what we did for our countries."
Yeah.
And that's how.
But this is the biggest distraction, right? For business.
That's what I'm trying to say.
Yeah.
If we do get a deal, that would be a huge upside for the stock.
I think that would be great. That's like what's holding leaders back.
Right.
Their system allows them to outlast us.
No,
I worry.
No, they're going to
Sure,
blink.
you've got a dictator for life in place. Absolutely.
Maybe. It's getting frothy over there, and I don't think. Well, we push 200 onto the table. They push 60. If you're in Vegas, somebody's going to fold.
Yousef, great to get your insights. Thank you so much. Yousef Abbasi joining us.